A very good afternoon, everyone, and welcome to our September webinar, Finding Future Growth Stocks in Time of Turmoil. Look, we're almost out of time, so I really just want to take this time to focus on a few questions that we've had from our attendees. There's a question about moving averages. Greg, you talked about how you use moving averages. Do you have another example besides CIMIC where you found that to be successful?
The sector of the market that I've been focusing on recently, which has been moving in complete, I guess, different cycle to the main market, is the gold sector, and that's because obviously gold prices have been in a bear market for many years. But ever since the Aussie dollar has come under pressure in late 2014, early 2015, and the gold price in US dollars has held up reasonably well, the Aussie dollar gold price has been very, very firm, and it's up around about, last week it was $1,600 an ounce, and now I think it's around about $1,550 an ounce, which means most Aussie gold producers are producing very good profits at these prices, which is unusual for a gold producer because a lot of them are marginal and they've been through a very tough time. If you look at this chart of Evolution Gold, which is quite a large gold miner, I think it's the second largest in Australia, it gives you a good sense of how the trend is starting to work higher in a lot of these gold stocks, and many of them bottomed in 2013, 2014, and they've been moving higher ever since. Evolution, as you can see here. Now, in my interpretation, I would have said this has moved into an uptrend at the start of 2015, and as you can see, the yellow 50-day moving average crossed above the blue 100-day moving average at that time. At the same time as that happened, the share price broke out to new highs, which was a bullish sign. It rallied all the way up to $1.10, did a standard correction, that shakes a lot of people out who don't, I guess, maybe follow trends or don't really believe in the story. Corrected back down to below 70 cents very briefly, then rallied all the way back up to nearly $1.30. And around that time, the stock had an equity raising. It purchased another mine, and generally after that happens, you do see some consolidation, and the indication for me is that gold stocks are interesting to look at now.
The next question was about China. It looks like China is a hot topic. Like, Chris, free trade agreement with China. Do you think any stocks will benefit from that?
Shepard, hard to say at this point in time, but obviously stocks that are selling into China are going to benefit from that. There are a number of businesses that are now starting to do a fair bit of business in China. Some that some of our listeners indeed have pointed out. Bellamy's, the organic food, particularly a baby food producer, Capilano Honey, and Blackmores are powering ahead in China, and they'll benefit from the free trade agreement. There's also a lot of talk around the funds management sector. Obviously, Australia has a very good, strong, well-established funds management sector, and those businesses may well find opportunities if China opens up for them to do business there.
The other question was from Kevin. When should you sell shares? Now, Kevin, we do have a report on our website. I'll still get Chris to quickly answer that, but we do have a report. If you go to scaffold.com/free reports, you can actually see the Scaffold overview of when to sell shares. But Chris, do you want to just quickly, in about 30 seconds or so before we run out of time, just run through that question?
Yeah, sure, Shepard. I mean, we identify 5 key factors for when you might want to sell shares. The first is when the business's performance is declining. You can see that through Scaffold. There's many ways you can see that, particularly the Scaffold score or the capital history page that we looked at earlier. If the intrinsic value is declining, that's a key time when you might want to consider selling a share. Also, when a share price has become very expensive, we use a intrinsic value methodology, and if the share price gets way above that, that may well be a good time to sell. When future growth is looking less promising, I talked about BHP earlier, and that would be one that, I'm not making a recommendation here, but that would be one that you might have some concerns around. And the last one, of course, is if you only have limited resources, which most of us do, when you've found a better opportunity, that in itself can be a good reason to sell something.
All right, awesome. Hey, Greg, this one is actually for you. Where do you find moving averages?
I just use a free website called www.bigcharts.com, and there's a little side menu, and you can choose what you want there. So readily available. You've just got to search around a little bit.
All right, thanks, Greg. And look, we only have enough time for one last question, and it's an MFG question. Magellan, why have the profits doubled? Do you want to just quickly explain that, Chris, before we sign off?
Yeah, sure, Shepard. Simple answer is because the business is going really well. So if we pull up MFG here and we go to the capital history screen, you can see that indeed profits have gone really well. They've gone from 82 million up to 173 million dollars. Now that's basically a reflection of their funds under management. So what's happened with Magellan is, Magellan earns its money simply through fees that it charges on the money that it manages on behalf of investors, and so the more money that they're managing, the more fees that they're able to charge. They also, on many of their funds, will charge a performance fee. So what that means is if they outperform the index that they're measured again, then they can charge an additional fee. Now, their funds under management have been growing very strongly as the Magellan message, if you like, has been getting out there. In other words, because of their past success and their reputation as a very well managed business and well managed funds, fund managers generating good performance and consistent to a style. Incidentally, they use a value investing methodology, but they do it on a global basis. So their funds under management have increased considerably, which has a direct link through to their profits.
Okay, look, I'll squeeze in one last question, but because we don't have time, I'll ask to both you, Greg and Chris, and I'll ask for a very short yes or no and a small explanation. It's a question from Simon. Now, will the ASX market keep falling? Is there any more risk on the upside or downside? What's your guys' take? But very, very quickly, if you can.
Okay, very quickly. Looking at the charts again, I think that 5,000 level is very important. That seems to be the level where the buyers are coming in, seeing value in the banks with the yields. I think if we break below that level, then it's telling you that the profit outlook isn't probably as rosy as the market thinks, and I think we'll have another leg down. While we stay above 5,000, I think it gives us a chance to move higher. So it's not a yes or no question, and I don't think there is a proper yes or no question to that answer to that question.
Oh, thanks. I tried to put you on the spot there, didn't I? Chris, what's your take there?
Yeah, sure. I mean, I'm hesitant to make a call one way or the other too, because I really don't have much of a clue. But I would probably err on the side of it may well go down. I think there's a fair bit of challenge in the Australian economy at the moment, which means that profits may well be lower in the coming years, and that will impact on the share prices. One of the things that, for those people that really want to dig into it, there's a guy called Robert Shiller in the US, and he produces a thing called the CAPE index, which refers to the long-term average PE ratio, and that's proven to be a good indicator of where markets might go, and at the moment that's showing that there's a good chance that markets will go down. Admittedly, that's looking at the US market, not the Australian market. So the Australian market's a bit different. It hasn't had the strong bull market that the US has had, but nevertheless, if I had to make a call, I'd be erring on the side of negative right now.
I'll just add one more thing to that, Shepard, if I could. A lot of that depends on what the RBA does. If the RBA cuts rates, then we could go a little bit higher again.
Thanks for that, Greg. Well, look, thank you very much, everyone, for coming. Just a very big thank you to our two presenters today, Greg Canavan, who's founding manager of Daily Reckoning, which is a free subscription newsletter. And also thank you very much to our general manager for Skaffold, who's also a co-founder and the man behind the figures behind Skaffold. That's Chris Batchelor. And to everyone who's not yet a Skaffold member, I will send you an email just to say thank you for attending the webinar. You want to have a look at that email. And if you have any questions, feel free to give me a call on 1300 Skaffold, or just send me an email at team@Skaffold. Thank you very much, everyone, for attending. That's all the time we have for today. Look forward to speaking with you guys either on the phone or via email. Thank you very much.
Investing in shares can be rewarding when you do your research, but it can also take up a lot of your time. With so much information out there, how do you quickly sort through the companies worth investing in and those to steer clear of? Skaffold is my research tool of choice. It tracks and reports on all ASX listed companies, plus thousands of global stocks daily, helping me decide which stocks to buy and sell. I can quickly filter through the reports to get the information I need. The rating system is like a set of traffic lights for the stock market. Green is good, orange is caution, and red is don't go any further. Skaffold's top stock choices have been highlighted for their outstanding performance by Money Magazine. With Skaffold doing the work for me, I have the confidence to make investment decisions without having to spend hours sifting through financial data. Now you can take control of your time and your portfolio. Why not take Skaffold for a test drive today?